Welcome to Everything Money. We have two earnings releases that were great. But first off, let's talk about the market. The market was actually down today, but crypto has eclipsed $100,000. Bitcoin has eclipsed over $100,000 per coin. The euphoria and the nonsense continues. I don't get it, but that's what happens during euphoric highs. We're okay with it. The S&P 500 10-year cyclically adjusted PE ratio keeps going higher. Can't believe we saw a negative day in the market. Isn't that shocking? Ulta, Lululemon, both reported today. Both are up significantly after hours. Let's pull this up right now. We're going to pull up Lululemon first. And let's see how it looks. This is not Lululemon, that's Ulta. So let me do this since my first time really doing this right now. Boom. So Lululemon up 9.5% after hours after going up about 0.75% today. As you can tell, just a stunning company. This company generates a ton of money. This is their report right here. Net revenue increased 9% to $2.4 billion. America's net revenue increased only 2%. International increased 33%. That's incredible. Comparable store sales overall 4%. Now here's what's interesting. America's comparable store sales decreased 2%. Now, comparable store sales are the stores that have been open 12, 15 months or longer. Every company might have a slightly different definition of it, but this goes to show, is there a weaker consumer than the US wants to admit right now? We still see a lot of declining sales on the comparable side for a lot of companies. We'll see what Ulta reported next. But international, 25% growth. Gross profit increased 12% to $1.4 billion. Here's how they did. They reported $2.87 per share versus $2.71 expected, and $2.4 billion in revenue versus $2.36 billion expected. Guys, Lululemon's an amazing brand. They make great quality products. Women love them. Men love them. This company is doing well. Gross margin increased 150 basis points to 58.5%. That's a big jump, guys. That is not small. That's impressive. Income from operations increased 45% to $491 million. Wow. Operating margin increased 520 basis points. Guys, these are huge, huge numbers. Last year's third quarter, they reported $1.96 per share in profit. This year, they reported $2.87. Absolutely crushed it. The only small thing I don't like, a decline in same-store sales here in the US. Not a big deal, but there nonetheless. It's just interesting to me when I see that. Let's see. The company repurchased 1.6 million shares for $408 million. Now, the company's selling for 25 times free cash flow, 50 times last 5 years. Might be a little rich. I don't know. Very high return on invested capital here, though. Very high, close to 30%. High returns on equity. Maybe the stock is undervalued. I don't know. Doesn't feel that way, but a great company can sometimes appear overvalued when in actuality it's undervalued. 25 times, not so bad. Maybe it's a reasonable price. Look at these margins, 58.5%. That is incredible for last year. Wow. Look at these growth rates. 10-year revenue growth rate, 19.5%. 5-year revenue growth rate, 22.8%. 3-year, 21.8%. All here on our software. What do the 8 pillars look like? 6 pillars are checks. 4 of them, 2 are X's, and these 2 are based on 5-year PE and 5-year price to free cash flow. But look at this, guys. Their 5-year free cash flow is $860 million. Last year was $1.7 billion. So their 1-year free cash flow is twice the last 5 years. So this makes these 5-year numbers kind of irrelevant because they're such a fast-growing business. Let's see what analysts think about this. They think they're going to double their profit pretty much in the next 5 years. Incredible. Revenue growth, high single digits, low double digit growth, going from 9.8 billion to 16.5 billion. Just a colossal company. Let's see if there's anything else here. For the fourth quarter, they expect revenue 3.47 to 3.5, representing 8 to 10%. Net revenue in the range of representing growth of 9 or 7%. Oh, wow. They want to double the business from 2021 net revenue of 6.25 to 12.5 by 2026. Interesting. So guys, they just finished their call probably 10 minutes ago, or maybe they're in the middle of it. Check it out. Ulta Beauty, up 11% after hours. They were expected to report $5.14. They reported $4.52. Last year's same quarter, they did $5.07. So they beat estimates, and they beat the last quarter last year, the same quarter last year. $2.53 billion in revenue versus 2.49 expected, and 2.488 billion the same quarter last year. Guys, I own Lulu. Don't buy it just because I do or anybody else does. It's a company I like. Let's see what they have here. I mean, look at this. PE of 15.5, price to free cash flow of 19, high returns on capital, incredible business, 8-pillar thriller. Probably won't be that after this. These numbers come into play. Analyst estimates going from $26 a share to $41 a share in profit, and revenue still growing. Revenue still freaking growing. Okay. Net sales of 2.53. Comparable store sales only increased 0.6%. That is not a lot. That is not a lot at all, especially for I think a great store. You walk in those stores, it's clean, it's organized, it's nice, it's very welcoming. You want to go in there and spend more money. Look at these. Comparable store sales last year were 4.5% growth. This year, 0.6. Gross profit slightly down. SG&A expense up. Operating income slightly down. Interesting. New store openings, 26 new stores versus 12 last year. So not the greatest report, but you guys know how I feel about earnings releases. If you're new to this channel, these are just blips on the radar. I just want to make sure there's not something major announced like, hey, we just realized that nobody wants to wear makeup anymore. This business is going to zero. But they're fun to look at. They're fun to see like, hey, how did they do here? Ulta Beauty has proven that they're a very efficient business that does a great job. I'm in this for the long haul. I'm not in this for quarter to quarter. I do not care that it's up 11% today. God's honest truth. I want you to get to that same point. I want you to be able to say, I don't care either. Let's see. Comparable sales increased 0.6%. Gross profit driven by a 0.5% increase in transactions and a 0.1% increase in average ticket. Gross profit was basically the same. Let's see here. Okay, as percentage of sales, operating income was 318 compared to 327. Tax rate was 24.4 versus 24.3. For the first 9 months of the year, net sales increased 2%, due primarily to store contribution, new store contribution. Comparable sales increased 0.3%. So they've definitely declined on their same store sales growth, big time. Inventories up 1.9%. Short-term debt was slightly up about $4 million. Share repurchase, they repurchased 731,000 shares at $267 million, which is an average of, what is that average? Let's pull up a calculator and see. 267 million divided by 731,000. They paid an average of $365 per share. Now, you guys know how I feel about repurchase of shares. If they're done on cheap shares, you can do a great job. The company's going to add a lot of shareholder value to that. That's what I love. Now, for fiscal 2024, the company plans 11 to 11.2 billion before, and now it's 11.1 to 11.2. They were looking at a 2% decline to 0% to flat comparable sales. Now it's 1% decline to 0%. New stores, 60 to 65 was the previous guess. No change there. Remodel and relocation, 40 to 45, no change there. Operating margins, slightly higher. EPS, slightly higher. Share repurchases, approximately 1 billion, staying the same. Yeah. I mean, capital expenditures, slightly lower. And no, I mean, it looks pretty good. Looks pretty good. They're on their conference call right now. Guys, I buy companies that I want to own for 20 or 30 years. Will Ulta Beauty be around for the foreseeable future? I don't know. I think so. I think they do a great job of appealing to the right market. They do a great job of getting the right brands in there. They have a great gross margin in here. Let's see their gross margin here. 39%. That's great. You look at a company like, and I know Walmart's a little bit different because Walmart is, a discount store, but it just goes to show 24.5%. That's why their margin is only 2.4% versus Ulta Beauty's bottom line margin being 10 to 10.5%. Guys, good company. Women are going to buy more and more makeup as time goes on. We're becoming a more vain society. And I look at this going, this is a positive for a company like this. But again, never ever buy a company because somebody on the internet has, or even Warren Buffett or Howard Marks or anybody. We're here to teach a process. You can apply that process to everything that you're investing in because it's all about buying a dollar for less than a dollar. That's the big key here. Guys, if you're interested in getting the software, you can do all your analysis and even do your stock analyzer tool to see what Ulta Beauty might be worth to you. Let's pull this up right here. Look at my assumptions here. It'll tell you right now what the right price to pay is based on your assumptions. Check out everythingmoney.com. We have a wait list there. We're making changes behind the scenes. So lock it in now. $7 for 7 days. It's $1 a day to try it out. Thank you very much for your time.